Welcome to the New York Outlook for Tuesday, the 12th of December 2023. Starting off with the economic calendar, as you can see, we had British pound claim and count news that came out positive for the GBP, and thus as a result, in terms of trading GBP during the London session, we would only be open to taking long trades. In terms of the upcoming New York session, we have CPI, which is significant. Given this fact, you should close any open positions prior to the news release, and then based on the results of the news release, you can fade the news event by trading in the direction of the suggested direction because of the news release. Essentially what I mean is, if CPI is positive, then you should short GBPUSD, and if it's negative, you should long GBPUSD. Jumping into the charts and what had happened since the London session, essentially we're still within, or rather we're still between these two 4HOBs. Going into the 15-minute and explaining the rationale. So essentially in my London Outlook I had an entry right here. However, that was prior to the Frankfurt session, and remember that I would consider Asia range liquidity and I wouldn't trade before the Frankfurt session. So given the situations, I would have placed my entry right here and my stop loss right here. There's a potential chance that you would have been triggered had you placed your entry exactly on the Asia range, as there was a slight wick from the news release right here about unemployment. However, it's unlikely that you would have been triggered given that it barely actually tapped. We can measure it quickly to assess the size. It's 0.1 pips, and on average that's a lot smaller than the spread for GBPUSD, so highly unlikely that you would have been tagged. However, even if you were tagged, remember that you probably want to trade in the direction suggested by the news release, in which case it was positive and we should only be looking for longs for GBPUSD. You would have had the opportunity to get out break even, at least with a 1-to-1, or if you exited immediately then at a break even, but otherwise this trade was unlikely to be tagged, so just going to mark it as an invalid trade. Just to recap on why shorting from here made sense, it's based on the assumption that demand had not yet taken control, and thus given that we had a change of character and the assumption that supply is in control, with the fact that the entry is prior to the level which, if body broken, will validate control, since we are within this area we could short. So given that fact, this would have been a valid entry. Whether you triggered or not is another question, and then how you manage it is, in my opinion, is that you get out break even, because there's more evidence to suggest that longs make more sense than shorts. And then in terms of taking this long entry, if you were comfortable to argue that demand took control on the 15-minute in this leg, then this entry could potentially make sense on the basis that the Asia range was broken there, and we're using this range, so this verb is relevant. And then if we want to align this POI right here with this verb, using this as liquidity in the leg and putting your stop loss at the 11% level would have made sense. However, I think it's quite tough to justify that 15-minute demand is in control. Why I'm saying that 15-minute demand may be in control is, yes, I know we reacted to this demand, but we haven't broken that break of structure right there. However, what we do have to remember is that we're operating in a pro-trend primary leg, which then makes this a pro-trend primary leg OB support, which then makes this a pro-trend secondary a pro-trend secondary leg. As a result, we can consider validating order flow as a result of this reaction to this 4HOB. However, the reason why I'm not comfortable with the long is because if we look within here, while we do have this imbalance, there is no window of imbalance. As you can see, where this imbalance exists, there is no imbalance within this, and thus I'm hesitant to consider using the range to actually validate that demand is in control, because that would be the idea. Price went up, came down, reacted to this range, then broke structure right here, and then we can argue that demand is in control. And while we have change character right here, there isn't enough evidence to suggest that supply is holding into this entry, which makes this a valid entry. However, like I said, I'm not comfortable with using the range, so I'm going to note that not comfortable with using the range because there is no window of imbalance. So this entry is invalid in my opinion. However, if you are comfortable with the order flow, this would have been a valid entry, and my opinion is you should have taken profit right here at 1 to 1.5. Given the significance of CPI, of course, depending on the result of CPI, we'll get clear direction on who is actually in control, and then we can trade accordingly. In terms of the 5 minute, if we quickly look here, on the 5 minute, there's a chalk right there, and then supply holds, so supply takes control. However, the problem is we already have the pullback phase secondary leg, and this would be a tertiary leg which would invalidate it. So shorts were off the cards, longs were on the cards. 5 minute longs were invalidated, only 15 minute longs made sense. And given where we are right now, I just want to adjust the visibility right here, but yeah, essentially given where we are right now, we trapped in a secondary leg pro-trend. So our options now is either for the secondary leg to be reset with a wick of this level here where the secondary leg started, or a secondary leg extension point. We can probably set an alert there and an alert here, so that you're aware of the secondary leg. But at the moment, unless you're in this long, or to be honest, at the moment you shouldn't be in any trades. Wait for the news release and then fade it accordingly. We haven't moved that far today. We're pretty much in this range, which means there's lots of opportunity to actually to actually trade in terms of the daily range. There is space. So yeah, be safe. Consider the news release, the result of the news release, and then trade accordingly.